Hello, my name is Peter. I work as an accountant and also as an auditor. And today I'm going to give you some tips on how you can pay less taxes legally. To be noted, tax systems are different from country to country, so you should always consult with your professional in your country. The areas we're going to cover are personal taxes, business taxes, and we're also going to cover 401k and how you can defer taxes through investing. Personal taxes. Now, personal taxes you can't really do too much about. Those are already calculated before you even get your salary. However, I'm just going to show you how they're briefly calculated. US uses a progressive tax system. That means you don't pay the same rate on all your income. Instead, your income is split into chunks or brackets. Each part is taxed at a different rate. Here are the 2024 brackets in a single filer. 10% on the first 11,600, 12% on income from 11,601 to 47,150, and then 22% on income from 47,151 to 100,525, and so on. In this example, there is used a taxpayer of 58,000, and then you can see how his tax proportions are separated into different chunks. So in this case, you don't pay 22% on everything. On top of your income tax, you also pay payroll taxes, which 6.2% for Social Security on the first 168,600 of your income. And then you have 1.47% for Medicare with no limit income. In total, 7.65%. But I'm not going to go more into depth about that. Business taxes. Now, if you're a business owner, you can get deductions related to your business expenses. However, it needs to be noted that those costs need to be business related in nature. They can't be personal related. One example can be if your business sells shoes, you can deduct costs related to purchasing shoes for resale. However, if you just buy shoes for personal use, you can't deduct them through your business. 401k. When you contribute to a regular 401k, that money comes out before taxes. Let's say you make $70,000 and then you contribute $10,000. Now you will only get taxed on 60,000 of those. Those 10,000, they get deferred into the future and you won't pay taxes on those until far in the future. So 401k is a good alternative. Investing. Now you can defer your taxes through investing. Let's say you invest $100 and then you have a gain of $10. So now you have $110. You don't have to pay taxes on those $10 that you've gained until you realize those gains. And by realizing, I mean sell the stocks. And that's a good strategy because usually when you get paid your salary when you work, you get taxed immediately. Now, if you have capital deployed, the money that you invest, then you don't have to pay taxes on the gains before far in the future, before you sell the stocks. So in this way, you can just let the money accumulate and then eventually, further in the future, you can sell the stocks and then pay taxes on those. That will be it for this time. If you find this information useful, please like and subscribe. If you have any questions, write down in the comment. And also, different countries have different tax rules, so I would advise you to consult with a professional in your country. Otherwise, see you next time.